Hey guys, Boris Schlossberg from BKT. I want to do something a little different this week because obviously we've had such a historically volatile week. Ironically enough, by the way, if you look at all the indices, they pretty much ended where they traded on Friday. That's the irony of the whole thing. We probably had the single most volatile week in the history of financial markets, but when the dust settled, the prices were pretty much where they were on Friday all across the world. But because this week was so volatile and because we sort of stayed to the sidelines on our micro models since they were impossible to trade, I did a lot of intraday trading. And I want to show you again some of the levels trading that I do intraday that you may find very interesting. Now, the first thing I want to preface it with is by saying to you that I'm pretty much a non-technical trader. I don't care about Fibonacci levels. I don't care about moving averages. I don't care about anything that Gardley setups. I don't care about any of those things because while they may work for some, I basically believe that very simply in the currency market, people just trade 00 and 50. The majority of the people really don't care where the moving averages are. They don't care where the fib retrace levels are. The support is going to be at the 50 in half dollars and dollars. And I want to show you a couple of examples in the dollar yen trade that I traded to the upside and to the downside to show you how I traded these levels. Now, this is Friday night or Friday early morning action after the RTC announcement by the Fed. Clearly, the initial announcement very dollar positive because it removes this whole notion of risk. We were in a virtual meltdown financially. In comes in, Treasury to the rescue. They're going to buy up every single bad asset in the world. They're going to rescue everybody. So presumably this is a dollar positive move. But here's the thing that you want to be watching when you're trading these levels. I, first of all, was definitely skeptical about dollar value in all of this. That I really thought that while the euphoria was going to last, common sense was going to take over the markets, and they're going to realize that this is not a panacea for the solution. But despite my own bias, the key thing about this setup is you only want the price to tell you if you're correct. So, perfect example: 107 level approaches. We've already had a big move of almost two handles. The question is tradable or fadeable. Now, I'm going to take my bias as being fadeable. In other words, I'm skeptical of this dollar move moving any further. But I'm not going to act on it until and unless the 107 level fails. And here's what I mean. Price goes through the 107 and then must be given back. That means they can't hold the 107 handle. They sell it back down. At this point, I want to be a seller. I'm a seller at 107 with a 20-point stop, 30-point target. Boom, boom. I've taken a nice retrace. I made a 1.5 to 1 risk reward ratio. Very nice. Now, Europe comes back online. Of course, 107 here at this point is given, but I'm actually away from the screen. I missed this whole trade here. At this point, basically, you have to decide. Are they going to now run it for the 107.50 handle? And in fact, they do. You could have just simply taken the 107 and run with it, but that wasn't a trade I did. So I'll ignore this point because I don't want to tell you. I only want to talk to you about the trades that I did. We go back through 107.50, and again, I ask myself, valid level or invalid level? And I'm thinking, again, I'm skeptical about this dollar rally going much further. If 107.50 is given, I want to be a seller. 107.50 is given. Again, I do not short here. I short here once it goes through back down through the level because I want the market to confirm my thesis. 107.50 is given, boom, 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 another plus 25 towards me. I was able to bank the profits. Now, I change gears because U.S. session comes up, and remember, I sort of was not around for the European Open, and I know that we still have a dollar positive bias early in the morning, and I'm watching the U.S. futures, the U.S. Dow Jones futures. They start to rally strongly. At this point, my opinion is that they're probably going to try and run it for the day's highs, and I'm going to join it if the 107.50 is given. So 107.50 in this particular case again is given. I have a good fundamental background with futures rising, and boom, 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 within 5 minutes, plus 30 on the move, I'm taken out on a positive trade. So the moral of the story is you don't have to have one particular bias. You examine the market on an hour-by-hour, minute-by-minute basis. You look at the supporting data, and most importantly, you look at the price action. If the price action is confirming your thesis, you have a reasonable risk-reward ratio with a positive expectation, and you have a pretty decent edge. That's my level setup. That's what I've been trading all week long, and it's been pretty successful. I wish you the best of luck, and I talk to you next week, hopefully with new micro trades.